Mm.
All right, now let's dig into other markets. Now we see the crypto space there. We see Bitcoin having quite a pullback this morning. Let's look at the Fear Greed Index. It's sitting at 50 points. That's neutral right now. Traders are neither afraid, or they're not afraid, and they're not in greed at this point. It's neutral. We're seeing sentiment in the crypto space at this point. Market cap, there we're seeing a pullback. It's down about 4.47%, still above the $2 trillion mark. Volume trading in total crypto space, that's Bitcoin plus the altcoins, $138.13 billion. Bitcoin dominance sitting at 41.35%. We see price of Bitcoin 44,000. That's $44,845 dollars per coin. We see it started to decline, struggled to stay above the 46,500 level and the 46,400 level. And we've seen that decline there to the 46,000 support was actually broken. And traders are actually getting quite nervous at this point, seeing the way the market is actually pulling back, with Bitcoin pulling most of the altcoins down. But some altcoins are still looking good this morning. Look at Ethereum there, $3,265. That's down also 4.02%. Volume traded 19.87 billion dollars. All right, let's bring in Michael Inaji now. Hello, Michael. Good morning.
Good morning, Letty. Thanks for having me.
It
Happy
seems
Friday.
it's a happy Red Friday this time, and I don't know. It seems it's because of the European Union Parliament, voting to move forward a draft legislation to take all privacy out of cryptocurrency transactions. And I'm wondering, how's that going to work, Michael?
Yeah, you hit the nail on the coffin. Yeah, basically they are trying to take the innovation out. They're trying to take the privacy out. Basically, what's going on is the European Parliament Committee on Economic and Monetary Affairs and the Committee of Civil Liberties, Justice, and Home Affairs voted on a draft legislation that basically, if you want to take out $1,000 or 1,000 euros out from an exchange, which you're already KYC'd on, and move that into an unhosted exchange, which most people will know as MetaMask, Ledger, Trezor, any wallet that's not hosted, so that's not basically running on a server that's been KYC'd, they want you to report that transaction. A little bit, a way of thinking about it is almost, this is from Brian Armstrong, the CEO of Coinbase, is think about it as every time you take $1,000 out of your bank account and you put it in your wallet, you now have to report that to the government. So it's like, this is a new technology, but it's even treated harsher than we treat the technology, which is cash, that we've had in the past. So it's a complete backwardation of how things have been going, and it's a real sign of, like, how regulators are trying to stifle crypto. Their reason why they're doing this isn't clear, but it looks like it's going to go through. It needs to be voted on by the Parliament, the EU Parliament, the EU Commission, and the European Council. So once that goes through those three fronts, the law should become permanent, and we should see it enacted. But this is a huge going backwards in terms of innovation, and this isn't in the light of what digital currencies are here to bring. They're here to bring economic freedom for people. So it's as good as if I want to send 1,000 to any one of like a Ledger or Trezor or anything, that now has to be reported to the government, which is absolutely nonsensical because the limit now is over 10,000 for any kind of report to go out to the government. So this is a huge stiflement of privacy for individuals, and it's not a welcome development at all.
Quite interesting. Not welcome, because I see that actually reflected in the market, the price movement this morning. We saw that pullback with Bitcoin and Ethereum. How are you seeing the market?
Yeah, I think the market is just going to get even weaker. We have the possibility by either May or June that the Fed actually raises the interest rate by 50 basis points, which is and they still have like 6 to 7 more raises this year. So the economic picture is looking even bleaker. I really do think this is just a dead cat bounce. I don't think this is actually Bitcoin trying to push to all-time highs or break out of this economic formation. that's going on in terms of the recession looming. The yield curve finally has inverted, so a recession is looming. So I don't think it's bullish at all. The Fed is tightening into an economic recession, and so anyone who tells you that risk assets are a place to be is completely wrong. I believe the best place to be right now is in cash. Yeah, I do own some digital assets, but I think a heavy cash position is one of the best tools to possess in your toolbox. Because once the recession hits and all risk on assets take a dive, I think that's when you pounce in, and that's when you take, your pound of flesh for waiting and being so patient. But I in no means do I see this recent bounce from 38K all the way to 48K as a rally or a continuation of a rally for us to go upwards. I think once the Fed starts hiding rates, it's game over for everyone.
Game over. All right, Michael. We'll see. It seems it's going to be quite an interesting weekend for the crypto market. We'll see if the sell-offs actually continue, or hopefully, the sell-offs actually end this weekend. All right. Thank you so much, Michael. Always good to talk to you. Enjoy your weekend.
Thank you so much, Laddie. Have a great weekend.
All right, so that's it on the crypto market, and that's a wrap on the program for the week. Thank you so much for being a part of it and watching today. Do remember to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Laddie Williams. Enjoy the weekend.